Good morning, everyone. Welcome to the On Time, On Target Morning Brief, where we invest in fighter pilot precision on a daily basis. Got a great show for you today. We're going to talk about the big banks that are out there that are being called in front of Congress today in front of the Financial Services Committee, led by Maxine Walters, which is sometimes fun to watch. Her line of questioning as well, or frustrating, depending on which side of the political divide you were on. But they're going in front of Congress to answer some questions now that the at least financial side of the pandemic has died down, if you will. Flashback to a year from now, or a year ago, where we had these big loans, we had the fancy acronyms, and the government's trying to throw money at people as fast as they can, and the banks were basically, a lot of the folks are saying the banks failed us because they couldn't get the money, they couldn't get the trillions into our hands fast enough. And I don't know, my take on that is I think they did a pretty good job of it myself, but Congress is going to ask the hard questions and get some hopefully good answers. There will be the standard political grandstanding that always goes on, but hopefully it'll be worthwhile for the committee to kind of dig into some of this stuff and see if we have to do it again. You've also heard the rumors about the COVID-19 being created in a lab, that there's plenty of evidence of that. And if so, of course, there's 20 more under the hammer, right? Ready to be released if that's true. And I largely think that, from my term in the military, I would have to think that we have weapons like that ready to go. Maybe not that cause a worldwide pandemic, but something along those lines, right? So they're going to ask about those questions. They're also going to get asked a lot of socioeconomic questions as far as making loans to those that are not necessarily, however you would like to say it, don't have the same advantages as maybe the traditional lending audience. So that's what we're going to talk about. Also, for our question of the day, we're going to get into the types of loans. I've learned a little bit more about that lately, and I will pass that on to you. Most of us tend to just get the same types of loans over and over during our lifetime, but there are other types out there. So that's what we're going to talk about today. You also see there are some longs in the room. Three that I actually like. The other two are kind of your Wall Street bets. Excuse me, that game is back, if you will. Both GameStop and AMC are up over 10% this morning. The only short out there is Nordstrom's. They've missed earnings, and there's really nothing to like about Nordstrom's. They're selling off pretty hard. So those are your options out there. If you're catching us on replay, thanks for checking us out. Make sure you hit subscribe and the notification bell so you get notified every day when these go live to YouTube. Also, if you want to join us in the room, it's $25 a month to come on in. Pretty small price to pay to be able to have access to the chat window and the Q&A window to be able to ask me questions real time. So with that, let's go ahead and get started. All right, welcome back, everyone, to today, Wednesday, May 26th. All right, let me refresh this in the room for the folks who just came in. See what we're talking about today. Why is that not? Copy, paste, working in the chat. Thanks for your patience. Well, what is going on? Try one more time, otherwise I'll just verbalize it. For some reason, this isn't working. Paste. There we go. All right, so there's the topics and longs and shorts. So welcome, everybody. Welcome back. Make sure you have your Q&A window and your chat window set up correctly with all attendees selected. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before acting upon anything you hear this morning. And full disclaimer information is available at OTOTnow.com. All right, mission objectives. grow our money, protect our money, and live off our money. This is a little bit of growing our money. There are dividends associated with the banks. JP Morgan, which is my favorite, and you know that, is around a little over 2% right now. So you could keep JPM as a long-term holding. The rest really don't justify it. And of course, if there's any financial crisis, the banks tend to cut their dividends. So they're not necessarily the dividends you can count on forever, like you can with real estate investment trusts or even energy for the most part. So it's more about growing our money, a little bit of protecting it too. The big banks are going in front of Congress today. We talked about that in the open. I think that in the large part, it's not going to really move the needle as far as the investments today. Like sometimes when you have like Zuckerberg or Bezos in front of Congress and they say something, it moves the stock, right? I don't think that's going to happen today, but I do want to take a look at these for the long-term forecast of how are the banks going to do in the second half of 2021. So when you really look at, of course, they were beat up in COVID. They were kind of the heroes coming out of COVID because they got money into people's pockets. So they've recovered a lot. If you look at JP Morgan chart, which we will here in a minute, they were down at 100, they're up at like 160 now. But really, when you look at the valuation, it's cheap. You can still move into JPM here. I'm rewickering a few portfolios to get a little higher dividend yield out of them. And that's one of the names I'm looking at for going in. But the topic of conversation tomorrow will be, the main theme out there is inflation. Is it or isn't it going to be a huge deal? And if so, how do you invest for it? So banks are one way you can do it because they can just pass on that net interest margin all right off to their customers, right? So they have to pay more in interest, but they can also charge more for the loans, right? They make the difference. They don't care what the raw numbers are. They only care what the difference is. So they'll be able to make money. And tomorrow we're going to talk about gold, right? I'm not a huge fan of gold, but gold has just been marching higher and higher and higher. And certainly, if two things happen, we actually have inflation that is starting to be coming. It looks more and more likely. Again, a lot of that's hyperbole right now. And really focused in like lumber, housing, corn. There's a few things that are kind of almost in bubbles. But if that really happens, that would be one reason to be in gold. And then the second one is if this crypto thing fails. I'm not trying to call that, but it's certainly been brought into question in the past couple weeks, enough for me to blow out of it entirely. So that's pretty significant, I think. And so if that happens, then you get money flowing back into gold that was sitting in Bitcoin thinking it was a long-term store of value. And, it turned out it's not necessarily a long-term store of value, right? Because it's moving, 10, 20% in a short term. People don't like that, right? So I think gold will be getting more love. That's what we're going to talk about tomorrow. All right. Let's see, what are the types of loans? We'll talk about those at the end. Flow, long, short, open, short, long. We'll go over the market review, headline review. Futures are in the green, setting up for a pretty nice day, even though there's a little negativity creeping in the market now. Here's the banks that we're going to take a look at. Most of these, these two are the ones that I'm really in favor of. JP Morgan is best of breed. Bank of America is undervalued and a good execution. The rest I really wouldn't touch. And if you want to pay a little fee to make less, you can get into KBE, which is the ETF, so you just own all the banks. I'm not a fan of that. I stay away from that. I think you can clearly go best of breed here. And of course, worst of breed is Wells Fargo. They're going to have a good decade hangover from ripping people off. You just can't do that as a bank. All right, we'll get into the short-term execution. Contingencies and academic resources are standard. All right, let's take a look at where we are in the market, which is always helpful. So when you really look at where we are on the year chart, we're in kind of that period of congestion that we talked about. We bounced off of the 400 level here in the S&P twice. Now we're back higher. Today's looking higher. Are we going to hit new highs next week? Well, we're kind of at that point, especially those of us that, in the kid years, is that, yeah, everybody's kind of, the masks are coming off. People are getting out. Tickets for everything out there are going through the roof. I bought extra tickets to an event for the specific reason of turning around and selling them, which I would never, ever waste my time. I would never take my time doing, except for the upside is huge. Go to NFL.com and pull tickets for any football game out there this year, and you're going to pay double what those tickets were like a month ago. So kind of an interesting time, but people are wanting to get out. People are wanting to spend money. The school year's ending. The nightmare is over. My kids, I guess, have finals. They're taking them online. They have to sit, instead of a proctored exam like you would have at school, they have to like sit in a room and keep their cameras on to prove they're not cheating. I don't know. Everybody's pretty happy with it. So a lot of positivity because all of this nightmare, at least for those of us with kids, is about over, right? And hopefully we can get out and do things and vacation. And I know people are challenged that don't have a lot of money, but if you do happen to have positive cash flow, I think you're going to spend it pretty hard this summer looking for stuff to do since we haven't been able to do anything. So all of that means the market goes higher. Right. So that's the tailwind out there. The headwinds, of course, are taxes and inflation, but we don't know enough yet. So it's kind of that headwind we know is coming, but we don't know when. Zoom in a little bit on the 5-day you can see the congestion here. And then the move up had been all the way up to here, but kind of settled back in. So just barely in the green now. And then as for our short-term trading, here's our two longs, Pinduoduo. They're all earnings. PDD and Dick's Sporting Good longs, both of those crushed earnings. And then, of course, Nordstrom is left for dead as old retail, and it should be. So there's your short of the day. The other long of Zscaler is attractive. It's at 12%, so it's kind of out of our range. It probably does have enough upside to be able for you to trade it and still keep the ratios right, but I'm not going to, so you have to do that one on your own. All right. Contingency, let's see, back over to headlines to check those out. All right. Let's refresh up at the top here. All right, you can see everything's in the green still. Make sure that pops up green. Yeah, so just not as much as they were before over in Europe. Red across the board, but just a little bit. Asia, green across the board, nothing major. Bonds 1.56 on the 10-year. So you're screaming inflation, and the 10-year's down to 1.56. It's like nobody's listening to you screaming. Oil above that 40 to 60 range. Here's your gold. So remember, we've been talking about this since it was 1700. And you're like, well, didn't you buy any? It's like, no, I didn't buy any. It's not my thing. But it's a valid thing for sure. And I do think if the current environment continues where we're worried about inflation and taxes and things, I think gold becomes attractive. When people say gold or silver, I used to say almost always silver. Now I'm leaning more towards gold just on a valuation base as a long-term store of value. So that's enough on that. We'll talk more tomorrow. Here's crypto. Bitcoin bounced almost up to 40,000. So crypto's coming back to life, but I do think the whole system has been brought into question recently with the hackers demanding Bitcoin and some of the stuff Musk has been saying and the Chinese government cracking down. There's just a lot of concerns out there. Okay. You saw Amazon buy MGM, so they own James Bond now, or they will. Let's see, Bitcoin comeback. Ford has a big investor event today. They're going to have 100%. Well, I thought it was 100%. So they're saying 40% electric car sales by 2030. I believe they're saying 100% long-term is they're going to be all electric. Maybe they walked that back, and that's why I don't see it. But we shall see. Okay, defend capitalism. That'll be good. So again, Republicans, it'll be a Republican-Democrat fight today, pretty much along party lines for the banks. So let's take a look at the banks right now. Here is Bank of America. It's my second favorite. So you can see it's run up from 24 to 42. That's almost a double. When you look at the valuation, though, which is where we are here, forward PE of 13.5. I mean, the banks are crushing earnings. So that lowers their PE. You get a little bit of a dividend, 1.71 down here. All right, if you want the best of breed, which is what I was looking at first this morning, is JP Morgan. Excuse me. Was at 100 like we talked about in the open around the election. It's up at 160. But look at this, 12 and 13 PEs forward. I mean, nobody's shorting it, less than 1% short over here. Dividend 2.2. I mean, there's just a lot to like. And it's Jamie Dimon. And there's two ways to win. He has the commercial side in Chase Bank. Excuse me, has the bank side in Chase, and he's also got the investment side in JP Morgan. All right, let's get over to the TD Ameritrade and set up for the open. All right, good morning, everyone. Welcome to the On Time On Target play of the day. We have 5 seconds to the market open on this Wednesday. Here we go. All right, you have 4 screens in front of you. The 1 minute on the SPY is off to the left. That gives us our overall market direction. We've got 2 longs. We've got Pinduoduo that beat earnings, and we've also have Dick's Sporting Goods that beat earnings. And then we have our short, which is Nordstrom that missed earnings pretty hard. So I'm gonna look at Nordstrom here first. High of the day, 34.15. So looking for about a 35-cent stop, which is really where it is right now. I don't feel comfortable hopping in right here. I want it to digest a little bit. In other words, what I'd really prefer is instead of it falling like a rock while I'm talking, which it just did, I would prefer for it to back up some, and then we'd take it short. So some short covering up here first. It appears that it might already be too far gone for us, so we'll keep an eye on it. We're still in that first minute of the day. All right. As far as Dick's Sporting Goods, well, that's flopping all over the place. 91.4 to 90. That's a $2 move right there. It's already outside of our range, so I'd really rather look at the double bottom going on here in Pinduoduo. Again, Chinese firm, if you're not familiar. You need a $1.50 stop. So if at 135, 136.50 would be our entry going north here, going up, if you will. Still keeping an eye on Nordstrom over there on that short. Would prefer for it to get up in here and we turn around and take it again. All right, so this isn't working. We get rid of Pinduoduo. It's just gone too far. And what was the other one? Zscaler. Then nothing but go up here as well. Already outside of the range. Bring PDD back up. Maybe we'll get an entry on it. All right, let's look at PDD. We're at 134.50, so I can do the math. That would be our bottom of the day. So then we would take it north of 136. It's pretty aggressive. Don't take it if you don't like it. But I do like the numbers and the storyline. So again, it's a $1.50 stop. So plan accordingly. It has to go north of 136 here. If it doesn't go north of 136, we're not taking it. Of course, Nordstrom falling off a cliff over there. All right, PDD long, get ready. Here we go. 134.50 is your lower stop. 136 is your entry. There's your entry. Get the lower stop in down here at 134.52. And then we're looking at 137.50 and off the screen for the rest of it. So again, this is a long. Get that drawn in there. Keep your stop in. If it doesn't hold the low of the day, then obviously we are out and we won't be retaking it. But if it keeps bouncing off that current level down there at the bottom, that's actually a good sign. It's just a sign of strength. And we'll know here in probably 10 seconds whether it holds or not. And it didn't hold. So we're out of that trade. So PDD, a long busted, get the big red X of shame. All right. We'll leave that up there so we can think about what we've done. While we look at Nordstrom's just too far gone to be able to take it here. Dick's Sporting Goods, I don't like. Let's look at the action in GME. Don't really take this, more curious than anything. GameStop up big. So the theory is that Kramer was talking about this a little bit. The theory is that, oh, this is going to make me mad now. was thinking as we were just going to watch it like march higher there, but it looked like it changed around there. The theory is with the Reddit folks is that they kind of got all their fingers burned off with the crypto sell-off that we just had. And it's across the board. I don't care what crypto it is. They all have the same chart. Somebody was showing me this yesterday. I can't even remember who, but they're like, look at this. They showed me 10 charts and they look the same. And they're like, is this the same thing or are these 10 different charts? And I had to chuckle and I'm like, I bet this is crypto. And he's like, you right. The Bitcoin chart looked like Doge, looked like everything else, right? I mean, they're all mirror images because they all travel together. So the theory is that they got their fingers burned off. in crypto, and that they're returning now to the Reddit chat room to say, who can we punish? Wow, Pinduoduo selling off. So you've got GameStop that's in play for sure. AMC, which you could actually make an opening play out of AMC. I don't buy it, but look at these. Look at this. I mean, the volume, millions of shares every minute. You know, we're at minute 6. There's still 1 million shares in volume per minute. That's insane in a movie theater. Okay. The other one that Kramer talked about that has a heavy short presence that folks said they should get in. He's trying to encourage the Wall Street folks is Beyond Meat. Ran up earlier. You can make a case for a trade here. I'm not going to do it, but I do like the selling off action. You know, set your stop in there, pick up $1.50 above that. Up in here, you could almost trade that, but anyhow, low volume, so you have to be careful with what you're doing there. So, all right, let's get out of trading mode again. 0 for 1 on the day on the trade. I need to do better tomorrow. All right, so Beyond Meat, there you go, going higher based off of what Kramer was saying. Twitter going higher. TMRC is a new one that I just bought into yesterday. It's similar to some other mineral stuff, so it's not really a mainstream play, but I have some expertise in this area, which so that I like TMRC. It's low price point, pretty speculative though. Zoom, Roblox, Cyber has been a good investment. ATVI is Activision. Delta Airlines, wouldn't touch that. PPTY, we'll take a look at that. So again, PPTY is not traded a lot, but when you look at, this is real property, US, real property. So it's kind of like a real estate investment trust, except it's a little more pure. So that's why I like it. Most everybody's got some position in it. All right, don't see any of the banks on here. So are they in the red today? Let's click over to the red side. There's Bank of America down just a little bit. JP Morgan, I saw it bouncing around in here. Off fractionally, not really anything to talk about there. So overall, what's down big? Couple of spec names. China name, spec name. Buys are down less than 1%. So not a whole lot to the downside, but there is some pressure coming into the to the market here, where it hadn't flipped red yet, but it looks like it's going to. All right, let's leave this behind and go back and talk about types of loans. Going over to, okay, so when you go take a loan, most everybody out there is taking a home loan or a car loan. So really, you talk your progression through life for the younger folks in the room. First loan you're likely to have is a car loan. So if you buy your used car, hopefully you're spending less than 10 grand for a functional car as a younger type person, while you're making not quite hitting on all cylinders as far as making money, but you're also trying to save at least 10% of what you make, maybe 15%, 50 if you're really into it, like I was. As much as you can, right, to get your net worth going. You're going to take a car loan. So that's a secured loan. So again, if you don't pay, they just come take the car. You don't want to. You're not trying to put one over on the banks. You're just they're letting you leverage into a car that you maybe otherwise couldn't afford. So that's a secured loan. You can get also personal loans. If you're out there and you just need cash, you can walk into the bank. You can get a personal loan that is unsecured. They will pull your credit score, pull your credit history, analyze what you're saying with your, what you need it for, and then make a judgment on, can they trust you to pay that money back, or are you just going to take the money and bounce, right? Because if you do, there's nothing that they can really, they can come after you, but it's not secured by anything, so they can't go take any property. And if you go below the cash, well, you don't have the cash, right? And banks don't break your kneecaps; they just write that stuff off. So that's a personal loan that's out there. For buying a home, again, it's secured by the home. You generally have to have a down payment. There can be some creative ways to not put a lot of money down. Generally, that carries a little bit of a higher interest rate and some mortgage insurance. But if you put 20% down, you can get a nice low mortgage rate of around 3% for a 30-year, around 2% for a 15-year if you want. And again, the home is the collateral there. Now, once you have a home, there's a couple of options. You can take a home, see down here, you can take a home equity loan, or no kidding, you take the loan out, a hard amount out of your house, and then that way you have to pay all that money back. Yeah, payday loans. I just saw that going up there. Yeah, there's the yikes, right? The 30%. Those are the people who come break your kneecaps, or at least they have me believing that they would do it. So if I believe it, then. But yeah, there's payday loans, which we'll talk about here at the end. But for your home equity loans, you can take the full loan out, which is pretty uncommon anymore. Most people do what's down here at the end, and that's a home equity line of credit. And again, you're generally paying like the LIBOR plus 25 or 25 basis points, or LIBOR plus 50. That's going to put you anywhere in the mid 4s to mid 5% range. And you open it up as a credit. It's very similar to a credit card. If you have $75,000 of a HELOC and you don't use any of it, it just sits there, just like a credit card. If you don't use it, it just sits there. But it's available to you if you need to do something. Most people use home equity lines of credits for things like putting in swimming pools, because if you don't have the money, you'd have to get an unsecured loan. But if you at a much higher interest rate, like 8-9%, or if you have crappy credit, over 10%. But if you can get it out of your house and it's a HELOC, and then as you build your pool through phases, you have to fund different phases, you can just draw upon the money as you need it. So it's really kind of the perfect way, if you will, for something like a pool, or to actually do home improvements. Now, I know pool is a home improvement, just you're not going to get the money back out of it that you generally would out of redoing the kitchens or bathrooms or some of the higher value items out there. Credit cards are just that, use them. You can do the revolving credit, the 0% teaser rate for a year. All of that makes sense if you stay on top of it. I did that through my 30s. Just had, floating $50,000 that I was handing off from credit card to credit card. That was back when they were doing things like 1% fee. Now it's all 2 and 3%. So, it kind of cuts into your margin there. But there's all different kinds of things you can do with credit cards. But just realize if you ever trip into the credit card interest rates, which are 15% and above, for the most part, then it brings all of that down. So years of being fancy, and you screw up for a couple months, and you've already negated all of the gains you made. So I use credit cards heavy. Get your points or whatever. Especially if you have a high burn rate like we do, all of a sudden with volleyball and travel and hotels and all that stuff. Get your points, get your perks, all that makes it a little less painful if on the pocketbook, if you will. If you are a business person, you have to have a written business plan, but you can walk in and fairly easily, you don't even have to walk in, you could submit it through the SBA.gov website and get up to $250,000 pretty quick, depending on the health of your business. And I may actually look at doing this. And if I go, right now I'm a sole proprietor LLC. Obviously, my first full-time employee starts next Tuesday after the big weekend. And at this point, I have decisions to make. I've drawn out the entire plan to incorporate, have shares of the company, and then sell shares and have my employees accrue shares as they work here, sort of plan. So profit sharing / it allows outside investors to buy into what will be Anchor Star Wealth and become, buy their way into a board seat, all of that stuff. So to stand all that up, I may end up taking a loan to be able to do all of that, especially if I have to hire a compliance officer to help with that. Take a loan for the short term and then pay it back. But those are decisions that aren't quite made yet, but that's the way I'm leaning. But if you have a business idea and you need money, SBA is your friend, or your local bank can get you a small business loan. All right, that's all I've got for you today. Thank you so much for listening in. The payday loans, which I said we'd talk about them. Yeah, you can go to these Shark Place Lending. They're always just go outside your nearest military installation. There's 5 of them sitting there. They wouldn't be there if people didn't use them, right? And there's several TV shows based off of payday loans. I've never used one. I don't, But I know people getting square corners. That's obviously almost should be illegal, but then again, it's capitalism, so free market. So, just stay away from that stuff if you can. All right, with that, I'm going to let you guys go. So we'll talk to you tomorrow. Bye.